Welcome to On-Demand Ethics Training, brought to you by the Commission on Ethics and Lobbying in Government. Please note, through the end of 2025, this course can be taken before or after taking the live comprehensive ethics training course, and also serves as online ethics refresher training for all employees. Training topics. This online course will cover the following topics: maintaining high ethical standards, conflicts of interest, outside activities, gifts and things of value, post-employment restrictions, and an overview on the Commission. Ethics training serves the public interest in providing the necessary tools to help state employees identify situations that may present a conflict of interest in performing their state job. Your agency ethics officer is a valuable resource to help you navigate potential ethical pitfalls. Agency ethics officers provide advice and guidance on ethics laws and policies, review and provide approvals for certain regulated actions, offer live ethics trainings, and identify those employees required to file financial disclosure statements with the Commission. Avoiding conflicts of interest lies at the heart of Public Officers Law Section 74. It contains the Code of Ethics, the foundation of the state ethics laws, which provides guidelines for making ethical choices while in state service. It's important to note that the Code of Ethics doesn't just address actual conflicts of interest, but also the appearance of such conflicts when acting in your official capacity. Being a public servant means that we are accountable to the public and must act in the public's best interest and not our own personal interest. Let's start with the general rule of ethics. The general rule: you may not engage in any behavior that would conflict with your duty to the public interest. This requires us to examine our activities in the context of substantial conflicts between public duties and personal interests. Things to keep in mind: a personal interest can be for the benefit of someone else, like friends or family, or even a preferred vendor. The Code of Ethics describes 9 standards of conduct which aim to prevent conflicts of interest in the workplace. Standard A focuses on impartiality, ensuring that state employees maintain an independence of judgment when performing their state job. Standards B and C focus on confidentiality. As a state employee, you cannot disclose confidential information you have access to due to your state employment, or disclose confidential information to personally benefit yourself or others. Standard D focuses on misuse of state position and/or resources. This standard prevents you from securing unwarranted privileges or favors based on your state job, as well as being mindful of the stewardship of state resources. You are prohibited from using state resources for your own personal use, such as using state vehicles, printers, or computers. Standards E and G focus on financial conflicts. You cannot participate in any matter related to your state employment where you may have the opportunity to gain financially. You must abstain from personal investments that conflict with your duties and abstain from transactions with any entity in which you may have a direct or indirect financial interest. Standards F and H are our integrity standards. They examine your actions through the lens of the public. You should conduct yourself in a manner that does not give an impression that you could be influenced or would attempt to influence someone else. Also, you should not give the impression or raise suspicion among the public that you're personally benefiting from your official position. Standard I deals with business with the state. You can't contract for work with entities that are licensed or regulated by your agency. Personal business with the state. When conducting personal business outside of your state job, you may not contract with any state agency for goods or services valued over $25 unless there is a public notice and competitive bidding. Prohibited communications. As a state employee, you are unable to receive compensation in connection with the following activities before a state agency. This includes real estate transactions, rate-making proceedings, adoption or repeal of regulations, obtaining grants or loans, licensing or permitting, lobbying, and actions against the state in the Court of Claims. Doing so would represent a conflict of interest and would appear to the public as if you are trying to influence these key agency functions as both a private citizen and public servant. Nepotism is unfairly using your position or authority to provide special benefits to members of your family within the workplace. Nepotism affects decisions to hire, promote, supervise, discipline, or discharge certain relatives. The nepotism rules apply to anyone living in your household. This includes individuals who are not directly related to you. Family members are permitted to work in the same workplace as long as the proper hiring procedures are conducted. As a best practice, always consult with your ethics officer or the commission prior to engaging in any personnel decisions or contract negotiations involving a relative. Lastly, contact your ethics officer if it's a person you are acquainted with to avoid violating the nepotism restrictions. Former private sector employees entering state service for the first time need to be aware of the reverse 2-year bar. The purpose of the reverse 2-year bar is to ensure that you do not provide preferential treatment to your former private sector employers. Depending on the circumstances, you may be recused for a period of up to 2 years from any work matters that involve your former private sector employer. Your ethics officer or the commission is your best resource to determine if your job duties may be impacted by the reverse 2-year bar. It's time for an ethics check. A state employee used their work email and access credentials to help a family member get placed with a service provider. This included accessing and sharing private health information. What's the potential issue here? A, they were just being helpful, family first. B, using official systems and access for personal matters is a misuse of state resources. C, it's allowed in emergencies. Or D, it's fine if the information was accurate. I'll give you a moment to decide. If you chose B, that's the correct answer. Public employees must not use state resources, including email and access to confidential information for personal gain, even if their intentions are good. Privacy and ethics rules are in place to protect everyone. Please record the code word on your screen. You'll be asked to provide this code word in our employee attestation. The code word is conflict. Once again, the code word is conflict. Outside activities. There are many factors to consider when pursuing outside employment or professional roles outside of your state job. Public Officers Law Section 73 and 74 will help you navigate any potential conflicts of interest regarding outside activities. Some general rules to consider are that outside activities may not occur during your regular work hours, utilize state resources, or conflict with your state job. General rules and restrictions. Let's cover a few of the key distinctions between Public Officers Law 73 and the Commission's Regulations, Part 932. Let's examine what the law says. The law applies broadly to all state officers and employees. It provides restrictions on selling goods or services to the state. It also prevents you from receiving compensation for certain outside activities before any state agency. And lastly, prohibits you from engaging in paid lobbying activities. Now let's examine the Commission's Regulations, Part 932. The regulation applies to employees subject under Public Officers Law Section 74. It also applies to financial disclosure filers designated as policymakers. Policymakers are generally individuals in positions that involve high-level decision-making centered around agency operations and policies. The regulation also prevents your outside activity from conflicting with your state job. Your agency ethics officer must approve your outside activity in advance. For certain activities, both agency and commission approval may be required. The regulations also restrict participation in certain political activities and requires you to notify your agency ethics officer every year to confirm whether you are still engaged in the outside activity. We'll briefly cover some additional considerations for policymakers. Approval of your outside activity depends on the position and how much you expect to earn. Annual compensation between $1,000 and $5,000 requires your agency approval. Annual compensation greater than $5,000 requires agency and the Commission's approval. Contact your ethics officer or the Commission if you are interested in pursuing any of the following outside activities: public office or public employment, serving as a corporate officer, director, or not-for-profit director, engaging in business ventures, or outside jobs. It's time for another ethics check. John is not a policymaker and works as an employee of the Department of Motor Vehicles. He works part-time as a mechanic in his family's auto repair shop, a business that is licensed by his agency. Should John seek approval for this outside job? I'll give you a moment to decide. If you answered yes, then you are correct. Although John is not a policymaker, each state agency is empowered to establish ethics policies that are more restrictive than what is in the Public Officers Law. The ethics officer is a primary source of advice and guidance for questions about your obligations under both ethics laws and agency policies. As a public servant, anytime you are offered something of value, you need to ensure that accepting the item does not create an actual or apparent conflict of interest. We'll cover this topic more in depth in the Gifts, Honoraria, and Travel Payment Overview. Avoiding conflicts of interest. Avoid circumstances that suggest you are misusing your official position, and when offered a gift, examine the donor's motivation for a potential conflict of interest. Exploring the gift analysis. The gift rules in Public Officers Law Section 73 and the gift regulations requires an analysis to determine whether accepting a gift might create a conflict of interest. Step 1 is defining a gift. Step 2 involves understanding gift exclusions. Step 3 requires an interested source analysis. And step 4 is questioning whether the gift is a conflict. Let's begin at step 1, defining what is a gift. Anything greater than $15 is generally considered a gift. Some examples include money, services, loans, travel, lodging, meals, refreshments, entertainment, forbearance, or a promise of a job offer that has a monetary value. Step 2 of the gift analysis is understanding which items are not considered gifts. Some of them include awards or plaques, honorary degrees, promotional items, widely available discounts, gifts from family or friends, campaign donations, meal or beverages at professional and educational programs, food and beverage generally worth $15 or less, or local travel payments. Events not considered a gift include informational events, charitable events, and political events. Now, complimentary attendance, food and beverages are excluded for charitable and political events. For informational events, travel, food, and lodging for speakers are also excluded. Step 3 requires an interested source analysis. An interested source is a person or entity that has a vested interest in influencing you or your agency. Generally, you cannot accept a gift or anything of value from an interested source. An interested source is an entity or person who is regulated by or appears before you or your agency, has contracts with or seeks contracts with you or your agency, or is a registered lobbyist or client that lobbies your agency. The ethics rules also address redirecting gifts to third parties and accepting multiple permissible gifts. Gifts that you are unable to accept cannot be regifted to a third party. This includes your spouse, child, or a charitable organization. In addition, accepting multiple permissible gifts can also be a conflict of interest. For example, if you accept a cup of coffee, it's important to examine each situation through the lens of the public. Would accepting the same cup of coffee weekly from an individual doing business with your agency appear as a conflict? When in doubt, your ethics officer and the commission are here to help. It's time for another ethics check. Janet reviews and awards agency contracts as part of her state job. Recently, a vendor was awarded an agency contract and sent Janet a small gift as a token of thanks. As an employee of New York State, Janet is unable to keep the gift herself and instead gives the gift to a coworker at lunch whose job duties do not involve the review or awarding of contracts. Is this a gift violation? I'll give you a moment to decide. If you answered yes, then you are correct. You cannot accept a gift and then transfer that gift if you are unable to accept it yourself under the gift rules. Let's take a look at the restrictions regarding honoraria, which are payments for a professional service or activity that is not related to your state job. Let's first begin with a definition. What is an honorarium? An honorarium is payment or other compensation offered in exchange for a professional service or activity that is not part of your official duties, such as giving a speech, writing an article, or serving on a panel at a seminar or conference. Here's what you need to know. Advance written approval by your ethics officer is required. If you are a financial disclosure statement filer, earnings over $1,000 a year must be reported on your FDS. Faculty members of the state university and city university campuses and other specific titles are exempt from approval procedures. Statewide elected officials and civil department heads cannot accept honoraria for speeches, and there is a 3-year record retention that must be made available to the Commission upon request. Let's cover a few of the honoraria restrictions. You cannot use state personnel or equipment. You must use vacation or personal leave if the honoraria is during your official workday. State funds cannot be used to pay for expenses. Payments from an interested source cannot be accepted, and you may not perform tasks that give the appearance of a conflict of interest. Depending on your state position and official duties, you may be required to travel. Next, we'll cover the restrictions that surround official activity expense payments, which are travel reimbursements that are paid or funded by a third party for an activity related to your state job. Let's begin by answering some of the more common questions. What is an official activity expense payment? It's a travel reimbursement by a third party for an activity that is related to your state job. Who approves it? All requests to approve a payment must be made to your ethics officer in advance. Are there travel restrictions? Yes. The mode of travel must align with your agency's current travel policies. Payments over $1,000 are required to be reported for financial disclosure filers. Lastly, there is a records retention policy. Agencies must retain these records for 3 years and make them available to the Commission upon request. Our next topic covers the importance of avoiding politics in the workplace. It's important to keep your personal political views and opinions separate from your professional life. The state workforce should remain nonpartisan. A best practice is to keep both your personal political activities and opinions on politics separate from your professional life. Political activity is doing something in active support or opposition to a political issue, party, candidate, or a partisan political group. Let's review a few additional restrictions on political behavior. Employees whose job duties require awarding state grants or contracts cannot ask applicants to disclose their political party affiliation, campaign contributions, or how they voted in any election. Individuals applying for positions in state government cannot be asked to disclose their political party affiliation, campaign contributions, or how they voted. Let's review some of the restrictions covered in Civil Service Law Section 107. Hiring professionals. If you're involved in hiring, you cannot ask questions about a job candidate's political affiliation, contributions, or voting history. Employees and potential employees cannot be questioned about their political affiliation as a condition of employment. In general, you cannot use your state position to coerce, intimidate, or influence employees for any political purpose, or use your official authority in exchange for political action on someone else's part. And lastly, state offices may not be used to solicit or collect political contributions. Let's review a few political activities you cannot do in the workplace. Number 1, circulating a candidate's nominating petition within your office. 2, using office computers after work to produce a campaign brochure. 3, sending email invitations to campaign events to friends within the agency. And lastly, using New York State internet connections to forward email messages received from a partisan campaign or candidate. Please record the code word on your screen. You'll be asked to provide this code word in our employee attestation. Today's code word is guidance. We've explored the types of conflicts that occur while in state service. Now let's take a look at the post-employment restrictions that apply to employees once you leave state service. The purpose of the post-employment or revolving door restrictions is to prevent you from benefiting on the insider knowledge, contacts, expertise, and relationships that you established throughout your state career, and utilizing that information to either benefit yourself or someone else. There are 2 types of post-employment restrictions, the 2-year bar and the lifetime bar. Let's take a deeper dive with the 2-year bar. The 2-year bar limits your interaction with your former agency for a period of 2 years that begins immediately after you leave state service. The goal here is to prevent you from influencing a decision or action by your former agency or gaining information unavailable to the public. In addition, you may not appear or practice before your former agency for 2 years following your separation of state service. This applies to both paid and unpaid work. Some examples include negotiating a contract with a former agency, submitting a grant proposal or application, and representing a client in an audit. Related to the appear or practice prohibition is the backroom services prohibition. The backroom services prohibition prevents you from performing in client services relating to a matter before your former agency. Restricted activities include preparing documents for a private firm that will be reviewed by your former agency, helping someone complete and submit an application to your former agency, and developing a plan or strategy for influencing a decision by your former agency. Now, the backroom services prohibition may not apply to you. However, it's always wise to contact your ethics officer or the commission for additional guidance. Executive chamber employees need to be aware of the special 2-year bar. Former executive chamber employees cannot appear or practice before any state agency for a period of 2 years. They may, however, be paid to perform backroom services related to state agencies other than the executive chamber. There are restrictions on negotiating future employment with an entity or individual that has a specific matter pending before you. If you receive an uninvited job offer or are interested in applying for a position, you'll need to do the following. 1. Engage in a 30-day cooling off period. 2. Notify your agency you're interested in pursuing the job offer. 3. Recuse yourself from any worked product. And lastly, cease contact with the entity. If you decide to leave state service to pursue other job opportunities, there are situations in which the post-employment restrictions may not apply. The government-to-government exemption allows you to pursue another government position in a local, state, or federal agency. If you are a healthcare professional, you may continue to care for patients that have been under your care as a state employee as part of the continuity of care exemption. In certain circumstances, you may be allowed to provide services to your former agency as a private consultant as long as your knowledge, expertise, and experience would be otherwise unavailable at a comparable cost. Their certificate of exemption requires both agency and commission approval. Let's conclude today's training with a brief overview on the Commission on Ethics and Lobbying in Government. The Commission's core functions include advice and guidance, ethics training and education, transparency of data, investigations and enforcement, and ethics and lobbying regulation and compliance. Commission legal staff is available to provide confidential advice to help you successfully navigate the state ethics laws. Contact our Attorney of the Day program at 1-800-87-ETHICS or email us at guidance@ethics.ny.gov. If you see something, say something. We all play a part in upholding high ethical standards. You can provide a tip confidentially or anonymously through our Report Misconduct program. To report a tip, call the Ethics Hotline at 1-800-87-ETHICS or visit our website for more information. Violations of the ethics laws can range in a penalty of up to $40,000 plus the value of any gift or benefit received. The Commission's investigation and enforcement proceedings are governed by Executive Law Section 9410. Enforcement proceedings are confidential until there is a finding or settlement. If you are the subject of an investigation, you are given an opportunity to respond, and all investigatory and enforcement procedures are publicly available on our website. Thank you for participating in the on-demand ethics training provided to you by the Commission on Ethics and Lobbying in Government. For questions on any of the material presented, please contact either your agency ethics officer or the Commission for more guidance. Thank you for participating. To receive credit, ensure you have recorded the 2 code words displayed in the training. Wait until the video ends and then click the blue Next button to access the online attestation screen. Enter the code words in the correct order. Please ensure there are no extra spaces when typing the code words. Then click the Certified checkbox and then click Submit, and you're all set. Thanks again for participating in your annual ethics training requirement.